Well, ladies and gentlemen, what has been going on? It's been quite eventful, hasn't it? Friday, Donald Trump comes out with the good old 50% tariff on the euro. And then everybody goes into the weekend with the idea, oh, that's it now. You know, we've got this tariff war kicking off again. The yields fly up and the bonds go down and everything's all over the spot. Euro climbs back up. Gold manages to come back up again. And then going into the weekend, Trump says, well, I'll tell you what, let's put an extension. Let's have a conversation. Like this guy, he's taking away the novelty of this tariff story. It's like no one's going to be taking him seriously, which is why they're calling it the Trump pattern. He comes up with a tariff. We're going to give you 50%. Then he's like, well, tell you what, let's just put an extension and let's work something out. Who does that? Well, clearly Trump does. In today's live stream, ladies and gentlemen, we're going to break it all down just to give you an idea of where we are across the board. We're going to be talking about the commitment of all the options traders that have the belief that Bitcoin will expire at the price of $300,000 by at least June 27th. That's the logic. So let's just put things into perspective. You understand what that means? That Bitcoin will end up going on a parabolic move to the upside from now. We're on what? 26th of May. So in 1 month's time, Bitcoin price action is going to end up going absolutely crazy. That's the logic. Now, I'm going to explain to you what happens when you get a number of traders that have an expectation that of price going to a specific point, and then you've got the expectation of those who don't believe that's going to be the case. And that's going to be talking about the put-call ratio. We're going to have a look at where we are from a macro perspective, because the macros and the price action, nothing seems to match. But if you have something in the back of your mind about where we are in terms of investors' sentiment, and it's going to make life a lot easier for you to understand and navigate this treacherous market that we're all trading. So if you are new, welcome to Traders Reality, ladies and gentlemen. My name is Tino. Let's get this party started off with this title. Stocks rise on Trump's tariff delay. Dollar slides, and this is the market wrap-up according to Bloomberg. Let's go into it. Says here, right, that the European stocks climbed with U.S. equity futures after President Donald Trump extended the deadline on an aggressive tariff for the euro. Remember, he said there was no deal. It's just going to be a 50% because the U.S. and the Eurozone, they're not seeing eye to eye. Now, all of a sudden, it seems like they are, okay? Going into it, it starts talking about the fact that tariff has returned as the major driver once again after concerns about Trump's proposed tax cuts and the impact on the US deficit. So what have we got? We got the euro story, which is a tariff problem. Okay, what about China, man? Like everything's pretty quiet with China and that deadline is getting close. So that's where you are with the tariffs. The US deficit, given that we had a moody downgrade, okay, on the US credit rating, the tax cut story looks like it's going to come through because there's not really that much opposition in the Senate. And the idea is that investors are like, hold on a second. Yeah, like it's all good. You wanting to put a deadline on the tariffs and extend it out so we can come to a deal. But this US deficit story is going to be the one reason as to why investors are either going to be buying US debt or not. And fundamentally, if investors aren't paying attention to a $150 trillion market, then we've got ourselves a little bit of a problem, okay? Now, this is where we derive the idea of sentiment when it comes to these charts, okay? Goes on to say this. A gentleman from CMC Markets, he says, this morning's confirmation of such expectations reinforces the so-called Trump pattern, which is increasingly seen as a successful strategy for risk-tolerant investors. So, in other words, when Trump says there's going to be a tariff, you can anticipate prices going to drop. Investors react. Then you know he's going to turn around and be like, let me put a deadline, and the markets will naturally react to that. This instability that Trump is giving to the financial markets cannot be sustained for long periods of time because you've got to understand institutional investors have to plow pools of liquidity into markets, into assets, and they need to build positions. They don't just simply buy and that is it. They have to go into certain assets over a prolonged period of time. Most institutional investors look at their yearly performance rather than everyday performance, okay? So if you have an institutional investor that's got $150 million that he wants to put into gold, he's not going to put it in one day. He's going to be doing that in increments based on what's going on the atmosphere of gold, okay? So that's not a sustainable thing, but great for anyone that wants to trade volatility. But leveraged institutional investors may be. But for the big boys that really want to park their money somewhere and generate a yield, these sort of marketplaces are not sustainable, okay? Now, going into the space of cryptocurrency, $1 million Bitcoin by 2030, okay? And it's going on the basis that it's all about the fact that the US deficit and the debt is going to be a problem, which will naturally force investors and institutional investors to start claiming the Bitcoin. Okay, going over into the Arkham itself to understand where we are with the balance. Look at that balance. 652,000 on the Bitcoin ETF. That is absolutely wonderful. So we're nearly getting really close towards the idea of nearly 1 million Bitcoin. So that's where your Bitcoin is going, ladies and gentlemen. Now we can correlate the buildup of this to Bitcoin's price action. Let's go and have a look at Bitcoin right now. Currently flirting with a very interesting range right now. Just go over to the 4-hour time frame. You can see that over the weekend, Bitcoin did come down a little bit and then it's made a nice little return to the upside. And we've already claimed the all-time high. Now, this is what you want to pay attention to. If we just go over to the daily time frame on Bitcoin, look at the actual difference between the all-time high sweep and where price ended up, okay? So you can see from the all-time high, it's only managed to achieve a 2.15% gain, okay? Now, what's got my attention is we haven't actually seen a nice, strong close, and we didn't spend too much time above the all-time high. And we only spent, what, 1 day, okay? Not even a full day, but we actually only spent just a very little amount of time at the all-time highs where Bitcoin ended up correcting because of the story with regards to the yields. The yield shooting up is what sent Bitcoin down. But Bitcoin has done very well to hold out right now on the 5 and 13 EMA, which does give us the idea that it is trending upwards. And until Bitcoin invalidates the 5 and 13 EMA, for all you spot holders, you don't really have anything to be too concerned about unless Bitcoin were to come down and clear out this range of 106,000. Now, you've seen, obviously, there's a big whale that's running shorts on Bitcoin right now. And I don't know if he's actually closed the position or not. He flipped from being long to now going short. And everyone's paying attention to this whale on hyper liquid or whatever it is on his position and his exposure, okay? But that's just one dude, ladies and gentlemen. It's a leverage position, all right? So it looks like there's a lot, but it's just one guy. He ain't going to be moving the market. And just because he's putting that size doesn't necessarily mean he knows something, okay? What you got to look at is the sentiment behind why the ETF balance is going up. You've got to also look at the bid and the order flow that's coming into play with Bitcoin. You can see that we've got lots of commitment in people buying Bitcoin as it's going down. So for anybody that is new, what we look for is the interest from bidders. So this guy right here bought Bitcoin at 110,000 for the sum of 8.4 million when the initial amount was 6 million. Now, what we don't know is if this was one individual order or it was a cluster of orders that equated to the initial amount of 6 million, but ended up transacting 8.4. So we know that if the order amount was more, if the total amount ended up being more than what the initial amount was, it means that investors are coming into these areas. Now, if you go back on the live streams over the last week or so, we've been paying attention to what's been going on inside of this area over here, where there've been very significant bid orders like 40 million, 30 million, 42 million, 60 million. And you can see that they've effectively sold off all that liquidity. Look, 2.54 at half a million, which was the initial amount. So look at these two numbers here, initial amount and traded value. This is going to give you the sentiment of investors in Bitcoin, okay? So let's just go through the order flow. So you've got 19 million traded and it was initially at 7.95. So let's just go back to what I said a few seconds ago. Someone was prepared to sell at 7.95 million, okay? That's what they wanted to sell. But then all of a sudden, another group of people came in and transacted to make it 19.82. So succeeded the actual initial amount by nearly 249%. What's that telling you? It's telling you that investors are seeing Bitcoin's price and reacting and selling at market in principle, okay? So you can see there's a lot of selling there. Price going up a little bit more. We got the same story over here. Where is it? There was another batch. Here we go. So initial amount of 12.9 million, and then they traded 15.7. So more people are coming into the chart, seeing Bitcoin's pumping and selling as it's rising. As we get further and further, we got a 20 million order, which the initial amount was 34 million, but they only transacted 59% of it. So Bitcoin gets back up towards the 111,000. We can assume that that order is going to get completed, okay? And then we go even further up, you can see that some orders are being missed, like there was a 6 million one there. Look at that one, 8.46, and it was initially 9 million. Go to the top side of the range, you got another 6 million, but they only managed to achieve 4.93. So what's going on is Bitcoin's not spending too much time at the all-time highs, and people aren't reacting quick enough, okay? Now, when we look at the current price action on the order flow, we can see that we're starting to get quite a bit of interest on the bid side right here. Now, what I have identified is the bids that are coming in. So these are people that want to buy Bitcoin, okay? So they buy it as it drops and they sell it as it rises. And that is counterintuitive to what you guys understand about the marketplace, okay? Let me put it into perspective for you. Here in front of you is the S&P, okay? This is the micros, the micros on the S&P. Now, you can see there's an order right here. If you zoom in, you can see that there's the blue area here, which is the offer, and this is the bid. Now, when the bid goes down, when price goes down, you've got someone right there that's just transacted for 10 contracts, 11 contracts, 13. What's going on there? Well, what's happening is aggressive sellers are coming in, selling into the people that want to buy. Okay, so they want to buy. So right now you can see it's coming down, and those are people that want to buy off the people that want to sell. Okay, so when price drops aggressively, all these buy orders are sat in the book, resting orders, wanting to buy at a cheaper price so that later on they can sell when aggressive market orders come in to send price up. So you see that there, 8 right there, someone's aggressively come in and transacted to buy into the people that are selling. Look, 33's just come in. So someone wants to buy and they've sold it, or should I say someone's been able to buy a contract of someone selling 34 contracts, okay? So that in conventional trading wisdom, when you see prices going up, you naturally think that buyers are coming in, okay? But aggressive buyers, yes. But the only way that they can sustain that aggressive nature is if they stay aggressive and keep on buying. Because as long as people come in and buy, then that means there's always going to be someone there looking to sell. That means if you look at the way Bitcoin's price is, we've got a collection of offers who are waiting for people to come and buy Bitcoin. Now, have we got the idea that everyone wants to buy Bitcoin? Well, yeah, you've got a great balance right here. You've also got the idea that options traders, where is it? Where are my options traders? Over here. Bitcoin options show bulls unbowed with open interest at record levels, okay? So this is where we are with it. Look at this. You see that the options activity is growing significantly since December, okay? And you can see that it's already at highs right now. It's getting very, very interesting with the amount of options open interest favoring higher prices on Bitcoin. Now, let me explain to you what happens when you're effectively getting into options, okay? Look, when you have an options, right, here is the price, right? So let's just make the assumption that traders are coming in and buying calls, okay? So they favor Bitcoin's price to be above 87,700 just for the nature of demonstration, okay? So you've got all this area here which is full of calls, okay? So people have been buying up calls and they're like, yeah, okay, cool, we want higher prices. Upon those calls are the margins of these calls. So down below, you've got the margins, which is why everyone pays attention to the max pain price. So for example, if there's options to say that we want Bitcoin to stay above 87,000, then the max pain for those investors before they say, you know what, that's it, we are done, and they get out of that exposure would be, for example, 82,000. Okay. So as long as Bitcoin can stay above 87,000, but doesn't trade towards 82, then those investors will see the benefit of those options being in the money. Okay. However, below that entry point or those calls are the margins for these options traders. And what you end up seeing is this. Sometimes price doesn't actually stay above the strike. It doesn't end up being at the point that investors are betting for. So if price does actually come back down below the call price, that would then be deemed as a worthless option. It will be out of the money. Okay. So these call investors are losing money on their options. They're either going to close off, or depending on whether they've got American or European options, okay, it's going to dictate whether or not their margins are going to be taken from the marketplace. Okay. What you've got to be mindful of is this. There's margins down below. Okay. So there could be instances in the market where price is going up in favor of the option, but then it does end up coming back down to attack those margins. And then the longer they attack those margins, okay, the more closer we get to the options expiry, where those options end up being deemed worthless because they're attacking the margins. Who's attacking the margins? Now we're going to get a little bit technical with it all, but hopefully I don't lose you on it. So you guys in trading options would may understand something about gamma, and then you've got Vega, you've got Delta, and all of that fun and games, or the Greeks, okay? But just to put it into perspective, I want you to look at it like this. Imagine you've got price like so, okay? Here is the scale. Here is price. You've got Bitcoin at 300,000 right there. You've got 100,000 over here. You've got other various price levels, all right? Now, what you've got to look out for is this. Behind each of these price levels are areas where there is interest in the option. So this is commitment coming into the option, okay? Now, when price starts to move, okay, it usually ends up hitting these points. Now, these points is where there's exposure in the marketplace. So going back to the idea of this options call right here, okay, this is all building up. So that means that when we go back into this, every time price makes a move up to then come back down, there is interest to be transacted at these levels. Okay, so when Bitcoin pulls back, there's a market maker stepping in, transacting in that area because he can attack margins, but also because he can transact in those zones, it's allowing him to get to a delta neutral stance, which is trying to eliminate risk. Now, you may have heard before that short sellers in Ethereum, there was a time when they were short selling Ethereum of around 3,000 contracts for whatever it was, a dealer that is, and they saw that the markets were still rising. So what they ended up doing was they were staying short on Ethereum, and then they ended up going long spot Ethereum, okay, just so that they could hedge themselves and protect their exposure. This is sort of the same thing that's probably going on right now with this option story, okay? For every time price comes down to a specific point where the gamma is, where most of the exposure is, market makers going to transact at those points. What we don't want to see is the following, okay? Let's take this back. Imagine you've got exposure here, and then we go down a bit, and there's more exposure. And that exposure ends up being below the strike price, okay? What we don't want to see is we don't want to see Bitcoin trading and then ending up going like so, coming up towards those levels, keeping the illusion that it's going to hit that options expiry point, and then it starts to work its way lower and the support is not sustained, and then they just transact at each of these levels. Because what you've got to understand, options traders aren't necessarily timed based. They are all not options traders, but the dealers themselves aren't timed based. They are all about delta. Okay. Their goal is to make sure that they sustain minimal risk. And wherever those levels are in Bitcoin's price, when we look at it, we just need to say to ourselves, okay, what is the chance of Bitcoin actually coming down and then continuing back up? And that's what we have to look for when we got something like this in terms of an options relation, where there is expectation of price to continue higher. So we've effectively got from now until June 27th, okay, for Bitcoin's price to continue to move up. Now, what we need to see happening is we need to see Bitcoin try and correct as much as it can to trigger support, to get the bids to come in and buy up the Bitcoin so that they can then offer it out even higher. Macroeconomically speaking, there are events that can come out that can lead Bitcoin to continue higher purely off the idea of macros. So if this tax bill does get confirmed, then investors will be like, okay, we've got a problem. The US debt is going to be very, very fragile. I'm not going to invest in US bonds. You go over to the bonds market and you can see that the 10-year right now is trading down, but it's because there's a bank holiday in the UK and a bank holiday in the US for Memorial Day in principle. So those markets aren't open. So you're going to get a mixed response from the marketplace today. No stocks are trading today. NVDA, there's nothing happening. So you're not really going to get the full impact of everyone's response to this story about the Eurozone. With that being said, you go over to Euro and you can see Euro has pulled back a little bit and it's just trading upwards nicely because it goes to show that the tariff story with Euro is not really a problem for the Euro, because the real problem is the US deficit. That's the real problem. That's going to be the reason why the market will continue to go up or down. If investors are not liking this tax bill, that means more money is being added to the deficit. That effectively means that the Fed can't sustain these high levels of interest. Something's going to break. Remember, they're refinancing $9 trillion soon. And if they're not cutting the rates, but they're adding to the deficit, they're going to end up keeping the rates higher, which then does put the economy into a bit of a pickle. Now, with that being said, going into today, we don't really have anything to be worried about in terms of news. Look, tomorrow, you got core durable goods, which they're already expecting them a bit of a contraction in those core durable goods orders. But again, if they're expecting contractions, that means the economy is not doing too good, or manufacturers per se, because no one's really ordering products. So we already know that things are slowing down, but they are of the understanding that the US economy is great. I don't get it. Going into Wednesday, you've got the FOMC minutes. What is Powell going to be saying? Not really too much, to be honest with you, because the expectation of the interest rates right now is still coming in at a 94% region. Where is it? Where are you? Hold on. There we go. Still at 94.4%. So investors have the expectation that things are going to stay at these current levels at 4.25, 4.5%. So if investors expect that interest rates are going to stay higher for longer, that only means that investors are going to demand more rates of return on the US bonds market, which will naturally push the yields up higher on the 2-year, on the 10-year, and the 5-year, which will then naturally have an impact on the stock market. Okay. Now, looking at it from the perspective of smart money, dumb money, you can see that we're pulling back ever so slightly. If I just zoom in right here, you can see that we've got prices are going down and smart money now is starting to come up ever so slightly. So what you've got to look for with this, you've got to say to yourself, okay, then let me just change that. Let me go back. What you've got to look for with this chart is you've got to say, okay, where is smart money right now in the perspective of what do they favor? Do they favor higher prices? Do they favor lower prices? What the hell's going on there, man? What am I doing? Here we go. Yeah. So right now, smart money is effectively selling because prices are going up, right? Dumb money is buying. That's why everything's up. Go back to the story of this, where people are buying as prices are going up. That's something you've got to take into consideration. So what we're looking for right now is the point where smart money is going to start saying, you know what? We're done with the buying, which means prices stop going down, and we want to start selling, which means prices are going up. Okay. Now, looking at it, you got the NASDAQ doing very, very well, but there's no one trading today in the principle of the stock market. So these moves, as much as they look very nice, there's not really any real volume behind these moves, which means it can equally go up and it can equally come back down again. Be mindful today that the NASDAQ could actually close halfway through the day. So around 1 p.m., they could end up closing up shop. But all of this move right now is the anticipation and excitement of the fact that they've paused on the tariffs. Okay. Until Trump comes out with something else stupid. But Looking at his schedule today, he's going to be laying down reefs. But I think as he goes to the golf club at around 20 to 1 today, Eastern Standard, then he might actually turn around and be like, yeah, man, we're going to stick it to the Eurozone and what have you. We're waiting. We've got great deals coming through. I mean, he put it out today on Trump's Truth Social. Says countries from all over the world want to make trade deals with us. It is a beautiful thing to see. The good old USA will have soon tremendous growth and be stronger than ever before. I don't see that strength. No one wants your debt. If no one wants your debt because they demand higher prices or rates of return on the yield for holding it, then what are you talking about, Trump? Your bond market is dog. It's crashing, okay? And your dollar as well. You're raising all these dollars, but your dollar is negative in principle. There's no appreciation right now on the dollar. So why would anyone do any business with it? The deals are coming in because they don't want to pay more, all right? Because you're putting up more, but that is hurting the balances. Now, tariffs are deflationary. I get all of that, but investors' expectations of things are not there. They don't think that this story of tariffs, this story of the trade, the US deficit is going to sustain the market's livelihood at continuing to the upside. Anything that's moving up is being sold. That's why it's such an aggressive move to the upside. And it's aggressive. Look, this like dead cat bounce. It's a fast move up. Okay. When we truly get the figures of what's going on, I think when the tax cut comes into play, that would slump the markets, in my opinion. But Bitcoin in principle should not be subject to that. And it's starting to show that is going to be the case. Be careful. But Bitcoin is not subject to dismissing all what's going on a macro perspective. It does come down, but it equally can go back up again. And if the sentiment is there, there's a strong chance that Bitcoin can sustain itself through all this chaos of tariffs and what have you. But once the US deficit story comes into fruition and they do pass the tax bill, that's going to put a lot of pressure on the bonds market, which will naturally shoot the yields higher. No one's going to be taking advantage of borrowing dollars because it's still too expensive and they have a higher expectation of return on holding US debt. Trump's not making that easier for investors right now. Here we go. Tino, Bitcoin on the 30-minute time frame. Let's just put that up a second. Hold on, I've got a question here. Tino, 30-minute time frame on Bitcoin hasn't touched the 800 EMA in 44 days, which is the first time in history. Do you think it might go for that liquidity? 30-minute time frame, 800 EMA. All right, here we go. So, gentleman, Catharic. I don't know if you're male, female. It hasn't touched this blue line right here in a long time, 44 days. Okay, that's the 800 EMA. Now, if you don't have this indicator, just get to tradersreality.com and follow from the homepage. Watch this video. It's only just less than 2 minutes long. Download the hybrid system PDF to help you understand this system. And then just join the Discord. And of course, download the indicators. The video here shows you how to do that. Okay. And of course, if you want to take advantage of setups using the hybrid system, then you get all of that in the Platinum membership. So you just got to go over to the members section or go to join, and it'll explain to you what you get as a Platinum member. But start here and get this PDF because it breaks it all down for you. Okay. Now, in reference to your question, it's not tested this 800 EMA in 44 days. Doesn't mean that it has to, okay? So what you got to look for is you look at the higher time frame moving averages. So we go to the 1 hour time frame and we say to ourselves, well, where are we in that respect? So Bitcoin right now is trading above the 50 EMA, which is this purple line. It's trading above the 5 and the 13 EMA, okay? But it's trading very close to it. And that's a problem for me. The reason it's a problem for me is because naturally, when you've got expansion in moving averages, even though moving averages are laggard, it does paint the picture that momentum is favoring higher prices. But when you start seeing smaller moving averages being closer to price, it kind of gives you a clue as to really what is the momentum developing into. Okay. Now, if you look here on the 1 hour time frame, a strategy by itself is when the 5 and 13 EMA cross over the 50 EMA, which is this area here. So this is the yellow line, the 5 EMA, and the red line here is the 13 EMA. When they cross over the 50 EMA, which is this purple area, that tells you that momentum is starting to come in to favor higher prices, right? What you need to see is price trading above the 5 EMA to sustain that momentum, okay? But if it starts trading too close to the 5 and 13 EMA, there could be a pause in the momentum. And this is where you come to the chart and say, is this the point where I say to myself, do I go long on Bitcoin or do I wait for a clear conviction on the moving average? So in other words, from the 1 hour time frame, you can see the chart. I mean, Bitcoin does have this red vector candle, which it's already tried to take, but it hasn't yet taken the Asian session ranges. We are trading at all-time highs. People do want to try and take advantage of Bitcoin on the cheap because they are piling up on the bid side right here. So as long as the bids keep on piling up, and we do see the offers coming in, there is an element of urgency coming into the chart right now with Bitcoin because people want to quickly sell because there is an expectation that there's probably going to be some retraces and Bitcoin coming back down again. And don't think it's bearish saying that, because if you're naive to think that Bitcoin can only go up every single hour of every single day, it's a joke. You know that's not the case. Bitcoin goes up and it comes back down. It has nothing to do with one's approach to bias per se. I'm not bearish, man. Just please get that out your vocabulary. That is not me. Anyways. So looking at it, you can see, okay, we've crossed over the moving average. So what are we waiting for? Well, we want to wait and see if Bitcoin is really going to continue with its narrative higher. Okay. We can take the sentiment that it's there. There's interest. They want it. Institutional investors are piling in. The expectation of higher prices with Bitcoin on the option story, it's all there. You've also got Peter Schiff. He's saying he's slamming Donald Trump on the tariff delays as a fake win. So he's giving the idea that Trump's doing this and investors are like, yeah, baby, we got a pause, and the markets just pump up, which is misleading. But when you look at it overall, we know that the trade deficit is a problem and investors are starting to seek the alternatives in the investment legacy world and starting to go over to Bitcoin as an alternative option. You really want Bitcoin to drop down and then make the recovery. Only pay attention to Bitcoin when it goes down. Why? Because you know people are buying at that point. And when that buying starts to become saturated and price isn't going anywhere from all those collections of orders, you then can premeditate a move back up, because those same people that have been buying the Bitcoin, they're going to want to sell it at a later point. And that's where you see this in this chart right here. Look at all this move to the downside. They were buying, they were buying, they were buying. What's the next logical thing for these dudes to do? Is to sell. And that's where you get this nice pump to the upside in Bitcoin. So when you see Bitcoin pull back, welcome it, because there's going to be a certain amount of time that people are buying Bitcoin on bid. So when it goes down, they're going to be buying it and buying it. And the psychology is that there's going to be an expectation to sell it later. When it's rising, you're focusing on the wrong people buying, right? But when it's dropping, you're focusing on the right participants, because retail's the reason why everything goes up, because everyone gets excited and they start buying the Bitcoin, okay? And they're buying it too late. That's why most people that are buying Bitcoin, when you look at, oh God, when you look at liquidations, okay, most of people are buying in these high points. And that's the sad truth. What about the guys that are buying down here? Focus on when prices are dropping. That gives you the clue of investors' future expectations of price. Capiche? Anything else, ladies and gentlemen? Tino, can you please explain what exactly is the problem with the deficit? The problem with the deficit is simple. For every dollar that the US effectively earns, they are paying out 126% on top. There's your problem. All right, let me just show you this chart right here. I think it's coming up. Deficit. Here we go. Here we go. It's now gone down. So total public debt percentage of GDP. So it's 121%. So for every dollar that they make, they owe 121%. Okay? Doesn't make sense, does it? It's not sustainable, which is why gold is going up so aggressively. Okay. Federal surplus or deficit, that is rising. Okay. And gold's futures price is rising. Okay. So that's not sustainable. So when you have this situation where the deficit is not aligning with, or should I say, the budget is not aligning with ways of reducing the deficit, that's when you start getting a transitional change in investors' expectations of investments in the future, which means I'm not going to pick up US debt because if I do, I want a higher rate of return for it. Our rate's at 4.2, 4.5%. So if your deficit is going up and you're not giving me anything to justify why you're trying to get it down, if anything, you're putting on tariffs, you're also going to do tax cuts. Why would I have any belief that I go and buy the US bond right now, I'm going to get a good return? The fact that my dollar is depreciating, I'm going to demand a higher rate of return, which is naturally why the yields are going to be climbing up as we get more information about this tax cut. If the tax cut comes in, US investors are going to seek a higher rate of return because it would then increase the deficit. Okay? It's going to end up costing the US more. But remember, Donald Trump's first cabinet meeting, Bessent said, we've increased the debt ceiling so we don't need to worry about that for 2 years. He even snubbed the Moody credit rating saying, not worried about it. Okay, so it's one of those hit and hope kind of cabinets. That's what we're dealing with right now. And based on the way Trump's behaving with his back and forth with the tariffs, I mean, it only just throws investors off continuously. So that's something you've got to take into consideration. How can the US have a trade surplus and still maintaining the dollar as a world currency reserve? They print it. That's why they removed themselves from the gold standard. And anyway, anyone that the US owes money to, it's in their currency. You can't default us. We owe you our money. Nah, don't need to worry about it. Just sit there with your deficit. It's all good. Okay. What are your thoughts? Any other questions, ladies and gentlemen, before we kill it? Tino is wrong at pivotal points. Don't care if I'm wrong. At least I'm giving you guys the idea of movement because no one is right, you know, and no one is guaranteed to always be wrong. You've got to look at it like this. How many of you are day traders? How many of you are spot traders? How many of you are, well, spot position traders? Okay. Everyone has a different conception of value. Okay. Everyone has. And that's why these markets are hard to navigate because you've got this orange dude stepping in every 5 minutes, changing people's intentions and belief and perceptions, you know? So ultimately, I don't care if Bitcoin is on the trajectory to go to the upside. I'm not blinded by just buy and hold. If you're a spot trader or a position trader, then that's all you really can work with. And all of this noise with Bitcoin going up and down is irrelevant to you. You're more of a, let me just go on to the 6-month candle and just focus on that. Look what Bitcoin's been doing. Look, it's just not stopped going up. There's your pancake swap listing right there. And then it's just continued to go up to the upside. You have no interest in whether or not I say Bitcoin's going to come down today. Because the problem that I find is if I say Bitcoin's going to come down, then everyone will be like, oh, Bitcoin's going to come down. Tino is bearish and it's going to keep on going down to the depths of hell because Tino thinks it's going to come down. Well, if I'm saying to you that I want it to come down so I can get understanding of these guys really showing the support of Bitcoin, then logic tells me that that is something that we should all be aligned with and focus on. I'm interested in the people that are buying it. And contrary to trading belief, if you're of the expectation that prices rise because people are buying, you're focusing on the wrong buyers. You're focusing on the retail buyers, which is why you go long at the highest point. That's the truth. Maybe not you, but that's why retail does that. That's why everyone's like, every time I take a trade, it always goes in the opposite direction because you and hundreds of thousands of other people look at the chart and think, damn, it's that easy. It's going to keep going up. It's going to keep. That's how people go into trading. I used to do that until I then understood something about the way the market really works. And do I know if how the market works exclusively and completely? No, because it's uncertain. It's speculation. We will never know because I can't pinpoint everyone's agreement of price or conception of value. I don't know that, and no one does. All I can do is look at this and say, I got people that want to buy Bitcoin as it drops. Okay. Oh, you're bearish. Shut up, man. Don't you get it? When Bitcoin drops, people are buying it. You're only interested in buying Bitcoin. You're interested when people are buying. You go onto X and you see someone say, I just bought 1,000 Bitcoin. I just bought this. I just bought this Bitcoin. BlackRock bought this. BlackRock did that. You focus on people buying Bitcoin. So you then attach the idea it's going to go up. Yeah. So when I think of it and say, hold on, when price is going down, right, and you don't see those posts, you think everyone's selling. No, they're buying it all up when it drops. But then when you see prices going up, you then see the posts. 1,000 Bitcoin bought, this was bought, this was bought. So who are you focusing on? Because you can have retail whale traders that have retail mentality. They either had a shit ton of Bitcoin from the start and they've grown it to such a balance because they held on to it. Now they've got all this money to play with. They make one purchase. The whale knows something. It's too much of a small amount in comparison to Bitcoin's price. You understand what you need to do to move Bitcoin's price. It's too much. Too much liquidity is required to move markets, ladies and gentlemen. You know? But that's my expectation. That's my belief. So if that works for you, happy days. If not, be sure to like and subscribe on the way out. If you don't want to see anything again, then I don't know what to say to you. But I will always make you challenge the conventional belief. I will always make you feel that way. Why? Because that's how you survive in this game. If you look left and you hear someone say, Bitcoin's rising, I'm buying it, get ready to start selling. The simplicity of that thought process is going to save you a lot of pain. Focus on when Bitcoin drops, because then the concentration of the amount of buyers that are coming in as it's dropping gives you effectively those reversal points. And that's what you want to pay attention to. All right? Mad love and respect, ladies and gentlemen. I hope that makes sense. Enjoy your Memorial Day, and I'll be tuning in to you all tomorrow. Peace.